Well, hi there and welcome to the ISC FX Options Weekly Outlook for April 18th, 2011. As always, this is Jason Ayers of OptionSource.net. Let's take a look at a weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the dollar has been trading against a basket of currencies. Well, the dollar index held the 75 level as support last week, despite slipping below for a couple of days. Now, a bounce could retrace up into the 76-77 focal zone. However, the trend remains to the downside. Let's take a look at a daily snapshot. Well, the daily chart reflects the consolidation that took place within that 75 range last week. Failure to hold 75 opens the window for a continuation down to 74. We really need to see a break above 76 to lend credibility to a change in the current downtrend. Next up, the CDD, the U.S. versus the Canadian dollar. Well, the CDD retraced back into the 96.5 focal zone, and a break above 96.5 opens the window for a rally higher. With Friday's pair value closing below 96, we can't rule out a retest of the 95.5 support zone. Let's take a look at the U.S. dollar versus the Japanese yen as seen here in the ISC FX Options pair value YUK. While the YUK retraced down as anticipated, testing the 83 support level. A bounce off of this level could extend into the 86-87 box. However, a break below 83 opens the window for a test of support back down at 81. Let's take a look at the EUI, the US versus the Euro. Well, the EUI held support at 69. A break above 69.5 is likely to follow through with the test of 70.71. A break below support is likely to confirm another leg lower in the continuation of the current downtrend. Let's take a look at the U.S. dollar versus the British pound as seen here in the BPX. Well, the BPX finished last week within the 61.5 support zone. A bounce this week is likely to meet with resistance up here at the 62.5, 63 focal zone. A break below 61 opens the window for a continuation lower towards the 59.5, 60 box. Take a look here at the AUX, the US dollar versus the Australian dollar. Well, the AUX closed last week below the 95 level. A failure to break back into the 95-96 focal zone opens the window for a continuation of the downtrend towards 92. We really do need to see a break above 96 to lend credibility to a bigger picture reversal of this current downtrend. Let's now take a look at a few of our key points. First of all, the U.S. dollar index held support at 75 as expected. However, the trend remains down. A break above 75.5 lends credibility to a retracement higher in the near term. The CDD tested 96.5 but reversed at the end of last week. A break above 96.5 lends credibility to a retracement higher. However, the trend remains to the downside. The YUK retraced lower as expected, finding support at 83. If this level holds as support, a bounce could extend higher to test 86-87. The EUI held the 68-69 range as support. A break above 69.5 should signal a move higher. However, the trend remains down. The BPX held support at 61. A break above 61.5 should signal a tradable move higher. Failure to hold this level opens the window for a continuation lower to test the 59.5, 60 focal zone. The AUX consolidated last week but remains below the 95-96 focal zone. Failure to reverse and consolidate above this level lends credibility to a continuation down to test 92-93. And this has been your ISC FX Options Weekly Outlook for April 18th, 2011. As always, this is Jason Ayers of OptionSource.net reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me this week. See you here next week.